Good morning, and welcome to the Thursday session, the second session of the Private Finance Advisory Network, and welcome to the Island Innovation Summit. My name is Jorge Barrig, and I am the Regional Transaction Manager for the Private Finance Advisory Network. I would like to, in addition to expressing my gratitude for you joining us today, would like to highlight that we have an exciting 90 minutes ahead for you, where you will get a flavor for, and you'll be introduced to how PFAN, as we affectionately call it, can provide services and benefits entrepreneurs, how it works with investors, and how it deploys its network of expertise around the region. You will get a sense also you will be able to meet a coach, an expert. You will be able to meet a member of the investor panel that we normally present projects to. And you will also hear from a very exciting entrepreneur and a very exciting project that is very near concluding its raising of financing. We are very much looking forward to having you experience this with us. And at the end of the panel itself, of the entire event, we'll have an opportunity for your engagement and your interactions. I would like to, at this stage, then turn the stage over to Mr. Federico Fiche, who is the Regional Coordinator for Latin America and the Caribbean for the Private Finance Advisory Network, or PFAN. Thank you very much. We look forward to this discussion with you and sharing our experiences with you. Federico?
Thank you, Jorge. Hello, everybody. Pleased to be here with all of you. I will give you a quick presentation of PFAN and before the panel. And so we are going to give you an overall presentation of what PFAN is. Some of you maybe receive let me see if you are seeing the right screen. Jorge, can you tell me if I'm showing the right screen, please?
You are sharing your screen, Federico. It looks like the front page of the presentation.
The full front page. Okay, thank you. Sorry about that. So some of you may already seen this from prior PFAN presentations, so I will go relatively fast on the overall, and then we'll focus on what we do in the region, in Latin America, and specifically in the Caribbean. So So the Private Financial Advisory Network, we are a global network of advisors that provide services to developers. Services are focused on coaching and investment facilitation. We pay the advisors. We are supported also by an extensive network of investment partners, institutional partners. While we started working in 2008, in 2016, PFAN has started being hosted by UNIDO and the Renewable Energy and Energy Efficiency Partnership, which is in a private-public partnership. We focus on networking as a core in our model, and we are supported by different donors in Europe and the US. Since 2008, we reached a milestone of leveraging $2 billion on projects finance this summer. We are currently supporting over 1,000 projects, of what 176 has raised finance. We have a high rate of success. Our projects, those that are focused on renewable energy, have installed in excess of 2 gigabytes of energy, and they are reducing about 4 million tons of CO2 annually. What we do is basically looking into, we see the market with a lot of projects that may require some hand-holding in order to be able to reach bankability. And the other hand, there is funding available, but issues regarding the quality of projects, access to the particular space where these projects are located. And what we do is we create this bridge between both. In the particular case of Latin America, the Caribbean, our particular approach is to have a balanced approach between the investors and the developers. Again, what we do on the services is we have developed our own pipeline where we support the projects in order to build their business plan and financial modeling. We do investment facilitation by doing free evaluation of projects, identifying investors for these projects, and supporting the negotiation and closing. PFAN does not provide finance or funds, does pay the advisors. But in case that in the middle of a closing negotiation, the investor or the fund requires of a last minute study or documentation, we in those cases can issue a grant to the developer to be able to access to produce this document. We provide a large variety of services to a large variety of technologies and sectors. We are technology agnostic. We focus on climate change projects, even when they do not have energy components, renewable energy and energy efficiency. We have a very strong focus on gender and social impact. We even have gender focal points in each region. We have done gender focus calls. And in the case of the Caribbean, we are very happy that the 2 strongest projects that have been reaching financial closing are women-led. So how we originate by presenting ourselves in the markets, opening calls. We receive calls for applications at pfan.net all the time. We don't close. We open 365 days a year. And we quarterly review this pipeline to look which projects are qualifying for support. We provide support on a la carte, depending on the stage this project is, starting with a quick due diligence activity that allow us to look into the documentation that was presented in support of the request of services, and produce a roadmap for taking the project from where it is at the time that comes to us to be able to be suitable for being presented to investors. So that's a journey that I just explained is divided in 3 stages. The first one, as I mentioned, is the initial one. What we look into the verification of the project as it's presented to us. The second is the one we sit down with advisors, we'll sit down and look into the business plan, financial modeling, support the investment structuring, and verify that the project is beginning or becoming investor ready. And these services that we provide in the stage 2 and 3 and others are advisory services. Therefore, PFAN do not provide technical assistance doing the work for the developer, rather work with the developer and handhold the developer in doing improving their documentation. The third stage is of investment facilitation, where we support them by presenting the project in investment forums, like the project we will see later in the roundtable has been presented in investment forums, global and in the region. And we provide the necessary training for the developer to present him or herself to the investor or investors that are interested in the project. In addition to these, we provide additional services in the sense that we follow up from time to time projects that we supported in the past to see what is the current status. In many cases, we re-engage these projects. We go back and provide additional support to projects that have been that the time of 6 to 10 months are not enough to bring them to the point of presenting themselves to investment, and we provide them for additional services. Overall, we have more than 150 experts that are advisors. In the Latin America and the Caribbean, we have 20 advisors right now that are local or regional. In the Caribbean, we have 6 of these 20 that are mostly in the Eastern Caribbean right now. So what is the story of PFAN in Latin America and the Caribbean? PFAN came and did 2 clean energy financial forums in 2013 and 2015. And in 2019, there was a decision to bring us to market in a permanent basis. And we are here day in and day out looking to support projects. We, as I mentioned before, we created this network of coaches, advisors. We created a network of investors. We are the first region for PFAN globally to have a network of investors, including during COVID last year. We supported over 20 projects, reported more than 6 financial agreements, and we have been able to expand beyond the initial focus of Central America and the Caribbean into South America. Our core team is here. Jorge, who is our regional transaction manager. Patrick, that you will meet later, is our strategic advisor for the Americas. And back in Vienna, we have our core support with Lucas and Marco. This is the core team supporting the region. So when our insertion, we have the experience in the region, we look into what are the challenges of the region, understanding that the enabling environment may not be there, that the quality of projects, perhaps there are many projects in very early stage or require support to reach maturity. And there is a challenge in the region, in the Caribbean, especially on issues of resiliency and adaptation. We then needed to confront the situation of COVID. When we started, we were doing everything in person, going around the markets. And we created this special hybrid approach, which is both regional with quarterly calls with investors and focus with roadshows in different countries that we have done. We work in partnership and collaboration. In the Caribbean, we partner with CCRE, the Caribbean Center for Renewable Energy and Energy Efficiency, and with Get Invest, which is a similar project preparation facility than ours, in supporting the development of the Caribbean project preparation facility housed by at CCRE. And as again, we focus on climate change, renewable energy. We are supporting also the implementation of the NDCs on the private sector. So what are the results since we came to the market? Since we came in the market since last year onward, even in the context of COVID, we reached 5 financial closings. We are ongoing 3 financial negotiations. We have more than 30 million in financial closing. We were able to do 10 roadshows, virtual roadshows, 2 investment forums. We currently have an investment network of 15 members. We have 3 partners that support us in the region. And as I said, we designed the CARICOM Security Project Preparation Facility, the private sector focus, and we currently with Get Invest support the operation of this. And we also support the Energy Transition Fund development in Uruguay. We have a high rate of return by each dollar that we invest in the region. The financial closing is 200 times. And as I mentioned before, the rate of success, well, the average rate of success of PFAN in globally 17%, our is at 30%. And it denotes the high quality of many projects that have come to us and the experience in the region with projects. So let me talking about projects. Here are the projects that have reached financial closure since we reinserted ourselves. One of them is going to be in the panel, GSR Biorefinery. The 2 of them are in Haiti. But as you can see from the typology, it's a mix of energy and climate change, which is our focus. And most important for you in the Caribbean, these are the projects we are currently, or we supported, or we are currently supporting. Fuego del Sol is a cook stove in Haiti. Some French in their own, we supported this company trying to switch from diesel to solar PV. We are supporting solar PV system scale-up sales mechanism in Barbados. We've been supporting AirSpark and microgrids in Haiti, and Sharon, who you will meet shortly in Belize with the bioethanol and power. We are currently under consideration 2 new projects, one in Jamaica, which is total energy efficiency and adaptation, and one of renewable energy in Haiti. And we are looking at 2 more projects in Trinidad and Tobago. So we are very excited that the demand for services in the Caribbean has been picking up. So with this, I finish our overview. Thank you very much. And I pass the baton back to Jorge, and thank you.
Thank you very much, Federico. Federico provided an overview. I understand there were lots of slides and some of them are packed with information. I was asked the question if the slides would be shared. My expectation is yes, they will be. So no worries in terms of that. One of the significant elements about the overview, and I hope that it came across, was how project-centric, how entrepreneur-centric PFAN is. You will see that manifested in the next phase of our presentation, which will be led by Patrick Daddario, our strategic manager, or strategic advisor for the Americas, who will guide a mini investor forum. So you will get a chance to see a pitch. You will hear from two experts and at the same time representatives of investors. And you will be able to see the dynamic. The strength of the PFAN approach is precisely that, as Federico also highlighted, there's a great deal of rigor in the type of support that is provided to the projects and the type of selection of the projects. And that is one of the reasons why we are proud of our success metric thus far. So without further ado, I think I will introduce Patrick, but I will say one final housekeeping element. The reminder that you can use the chat function for your questions. I've noticed there's a couple of questions that have been coming through Q&A. We will be addressing those as well. And very good. I think at this stage, enough housekeeping. Patrick, I turn the stage over to you and your panel.
Thank you, Jorge. I appreciate that. I'm Patrick Daddario, as Jorge said, the strategic advisor for PFAN for Latin America and the Caribbean. I've actually had the pleasure of accompanying PFAN's development from the very earliest days when we visited with the UNFCCC's expert group on technology transfer and proposed to them that private investment would be required to meet climate goals, and we're basically pushed out of the room. Obviously, the recognition of the important role of the private sector in climate change is virtually universal at this point, and PFAN has played its small but significant part in this. As Jorge was saying, the PFAN has a very strong emphasis on the entrepreneur, and specifically what we're looking at now is the kind of the beginning of the final stage of PFAN support after the coaching has concluded, and there's a financial model that is presentable and investor ready, a synopsis of the project, a teaser, and possibly the most important part of it is the investor presentation. And one of the very important things that happens in PFAN is whether we're talking in pre-COVID days where we had regular financing forums, or post-COVID days where we've had some smaller groups to which investors have presented, or to individual investors. Before that can happen, there's a kind of, well, what would be called in academia, a peer review. The entrepreneur, before appearing before any group of investors or individual investors, makes her presentation to a group that's composed of PFAN experts and advisors and investors. And those groups heavily overlap, because one of PFAN's principles is that none of us, with the exception, obviously, of the administrative staff, is a full-time employee. We all work in project development, sometimes in other regions, sometimes in other areas, but in order to bring the range of experience required to help entrepreneurs, we are all encouraged to work in parallel to PFAN, and that not be our sole gig. we are terribly honored today to have Sharon Hughes, who is the CEO of GSR Energy, who is going to present her Belize biomass project. Speaking of academics, she is an A student. She's currently completing a PhD in engineering at Purdue University. And we have experienced investors, Jason Valier from WRB, who's Jorge has mentioned is a partner in our investors network, and Ernest Hanhausen, who is a partner in Becquerel Capital and a PFAN advisor. The way that this session will work is that Sharon will do her pitch, and like the preparation for a PFAN financing forum, she will then be asked questions and have comments made by the Ernesto and Jason about issues missing or incompletely explained, or congratulating her on the quality of her presentation. And I'm going to let Ernesto and Jason introduce themselves to you. And in the meantime, we'd like to ask you a question, whether you think that it makes sense for there to be a biorefinery in your country, whether that's, you see that as a solution. As we've been talking, PFAN deals with both renewable and energy efficiency and climate change. And in this particular case, we have a project that deals significantly with all of those issues. So if you would please vote on your screen and submit that. And so now I'd like to very quickly have Jason introduce himself, just to give you an idea of what he does in the sector and the qualifications that he brings to be reviewing this kind of project. Okay, so we have 3/4 of the audience believes that there's potential for a biorefinery in their country. Okay, do you want to go ahead, Jason, and introduce yourself?
Sure. Thanks, Patrick. I'm Jason Valier. I'm with WRB. WRB is a family office that has its origins as a Caterpillar distributor. We've been working in the Caribbean for more than 50 years now, investing in various sectors, including traditional power generation and distributed renewables. That's primarily through the ownership of vertical utilities in Grenada, Dominica, Turks and Caicos. We've invested in water services and desalination, real estate, and banking. More recently, WRB has built a team focused on utility scale project development and been working as an IPP in renewables through our 28 megawatt content PV plant in Jamaica. That's been operational since 2016 now. We have a dedicated sister equity fund that is sponsoring, well, aside from that Jamaica project, sponsoring distributed generation PV platforms in both Mexico and Costa Rica. We have majority investments in companies called Bonverde and Go Solar in each of those. We continue to look for investments throughout the region, primarily focused on renewable energy and sustainable infrastructure projects. At this point, we have additional flexibility to make investments in both project level and corporate equity investments in these types of opportunities. And as Jorge has mentioned, we've been working with PFAN for a few years now, reviewing some of the projects trying to find things that are a good fit. And even those that don't end up being an investable opportunity for us are still interesting to see what people are doing and provide some of the feedback to help try to make those projects grow for PFAN and for the region in general.
Thanks a lot, Jason.
Sure.
As you can see, Jason's had a bit of experience with project review, so we look forward to hearing his comments today on Sharon's presentation. Ernesto, would you please introduce yourself?
Hi, I'm Eresto Hernandez. I'm based in Mexico. I'm partnered with the Becquerel Capital. What we do is that we basically structure renewable energy business and energy efficiency. We've structured in the past large utility size solar projects, mainly in Mexico, that we've sold, and now we are concentrated in distributed generation. We are forming DG platforms for gas projects and for solar projects. We currently have a solar DG platform in association with Marubeni from Japan. Our company is called kiwapower.com. And what we do is actually, we are an independent power producer for industries and commercial businesses where we installed solar capacity to supply them with efficient energy and so forth. We also have a gas platform that is on hold because of the regulation problems in Mexico. We are also doing structuring and project M&A in Central America and something in the Caribbean as well. Nice meeting you all, and I hope you enjoy the event today. Thank you very much.
Thank you, Ernesto. So just to be absolutely clear, what will happen now is that Sharon will introduce herself and make her presentation. To be followed up by, that presentation will then be followed by questions from each of our panelists. And we invite you also to submit any question that you may have for Sharon after the panel, or indeed, should you have questions about PFAN itself or to our other panelists. So without further ado, I introduce the star of our show, Ms. Sharon Hughes.
Thank you. Can you hear me?
Very well.
Okay, excellent. Is the screen good? Okay, hold on. Sorry for the technical delay.
Yeah. A transcription.
We were seeing your screen.
Yeah,
Sharon.
it was sharing,
just,
and I don't know why it stopped.
There we go. I think it's coming. There it is.
Sharon, if you could just click from the beginning there.
Okay, we got it?
Yes,
there.
Go ahead.
Okay, sorry again. Okay, so greetings. I'd like to thank PFAN and the other organizers for this opportunity. I'm Sharon Hughes, co-founder and CEO of CSR Energy Holdings. CSR is a woman-owned Belize company. The GSR team includes engineers and project managers who are experts at project implementation. We have worked on projects that are much larger and more complex than the GSR biorefinery in Belize. So we know the risks and have developed our project to mitigate these risks. Most importantly, we know that you cannot anticipate every risk. That's why we handpicked a synergistic project team, which I'll discuss later. GSR's zero carbon biorefinery in Belize is innovative due to its 3 key takeaways from left to right. First, our project uses the 3 C's strategy for implementation and development. Second, our project offers more bang for the buck. And third, our project is expansion ready. Now for our first C, it's choice. Oil refineries have no choice but to buy ethanol to make E10. On the left, oil refineries used to sell 100% gasoline at the pump. On the right, due to E10 mandates, oil refineries cannot sell 100% gasoline, as it has been replaced by E10, which is 90% gasoline and 10% ethanol. The ethanol reduces the CO2 emissions of the gasoline. So oil refineries have no choice but to buy ethanol. The second C is carbon. On the left, the problem for oil refineries is that there's a 2,000 million gallon mandate shortage of zero carbon ethanol in Belize's 4 tariff-free export markets. On the right, our solution is our biorefinery, which will produce 20 million gallons a year of zero carbon ethanol. It will be sold to these 4 Belize tariff-free export markets. And our third C is competition. On the right, that 2,000 million gallon mandate shortage is 100 times GSR's 20 million gallon supply. This means that 100 new biorefineries need to be built before we even see competition. That will take over 33 years, which is longer than our 25-year lifetime of our biorefinery. Here we compare a $3 million investment between 2 identical biorefinery projects, but in different locations. On the left is Rising in Brazil. On the right is GSR biorefinery in Belize. It offers more bang for the buck. The first bang is higher free cash flow to equity due to lower sugarcane costs in Belize. The second bang is higher impact, as our project will build a new pillar for the Belize economy. Now, for those of you who missed out on Rising's $1.3 billion IPO last month, which was oversubscribed, our project offers an alternative. Our sources of cash on the left and uses of cash on the right show that our buck is 3 million equity ask. This is the last 3% of our 100 million CapEx. You see, we have secured the other 97 million with the help of our PFAN coach, Patrick. On the left, GSR biorefinery in Belize uses the same equipment and experts as Rising's biorefinery in Brazil. On the right is our hand-picked synergistic project team that I discussed earlier. GSR's partners are biorefining experts that worked on Rising in Brazil. They will come to Belize and do what they do best. They will build and operate our biorefinery and manage the entire value chain. Also, they'll train all our employees and stay with the project for 25 years. As for the GSR team, we will do what we do best. We'll clear the path in Belize for our partners and assure ethanol sales. Most importantly, we will optimize our biorefinery from farm to ethanol sales. This optimization will reduce carbon to increase impact and reduce cost to increase free cash flow to equity. Notably, all teams worked on the financial estimates shown here, so there's high confidence in our numbers. Our project is shovel ready. On the left, we have our agreements in place for biorefinery construction and operations, as well as the entire value chain. Also, we have letters of support from the government of Belize and our environmental compliance permit. On the right, our biorefinery is in the ideal location in Belize. It's surrounded by ample sugarcane land and it's close to 2 ports, for ethanol exports. On the left, our 20 million gallons a year of ethanol offers more bang for the buck. On the right, the first bang is higher free cash flow to equity of 20 million a year. That's for the entire project, or 3 million a year for the equity ask. Our project will reduce 10 million tons of CO2 over 25 years and employ 1% of the Belize labor force. Notably, 50% of our employees will be women with equal pay. Thus, our biorefinery will be the world's first gender equal biorefinery. Third key takeaway is that our project expansion is ready for bioproducts because it's modular and scalable. On the left, our biorefinery serves as a foundation for other bioproducts. On the right, these bioproducts can be produced by our biorefinery by adding the best available proven equipment. The equipment cost is incremental compared to our biorefinery cost. Now, our project's also ready for worldwide expansion because it's repeatable and adaptable. First, we'll start in the Caribbean SIDS for our expansion. Then our Caribbean SIDS will lead by example for expansion to the rest of the world. Notably, that we won't need any more investment other than our 3 million equity ask because we'll use our free cash flow to equity to fund our expansion. So in conclusion, the GSR team includes engineers and project managers who are experts at project implementation. Our synergistic project team will combine their Belizean, Brazilian, and American ingenuity to assure success of our project. GSR's biorefinery in Belize is innovative because of the 3 key takeaways, which are, first, our project uses a 3C strategy. Second, our project offers more bang for the buck, which is shown here. And third, our project is expansion ready. Thank you, and I welcome your questions.
Thank you very much, Sharon. Even though I've heard this before, I always learn something more from your presentations. Before we turn the microphone over to the panelists to ask you questions, we'd like to ask the audience again whether they believe that there's potential for a biorefinery in their countries, and just to get a feel for whether they learned new things from your presentation. So there should be a poll appearing on the screen shortly. And we'd appreciate it if you, oh, there we go. So there you are. Please answer and submit. I will save my questions for later. But in the meantime, I'd like to invite Ernesto to begin the discussion. Ernesto.
Yeah, glad to. Thank you, Patrick. Sharon, congratulations for your presentation. It gets better and better every time. And I think you point out very clearly what your project is all about. It's a very interesting project. And I really congratulate you for that. And I wish you all success because it's a very nice business proposal. I am kind of intrigued, and I keep intrigued about the sugarcane issue in Belize. I mean, it's the base of the whole business. And I'd like you to give us, please, a background on how the production of sugarcane is and how have you managed to assure the volume in quality and quantity that you need process it and to produce the bioethanol, the expected bioethanol. If you give us that explanation, I will really appreciate it.
Okay, sure. First of all, the Brazilian experts we talked about came to Belize and analyzed the Belizean sugarcane yield potential. And we have a report that they did, and they determined that at a minimum, we could go with 35 tons per acre. Currently, one of the sugar mills in Belize is getting 40 to 50 tons per acre. So our estimates are based on the 35 tons because we went conservative. So we don't see an issue with that. Secondly, our experts right now manage 4.2 million tons of sugarcane in Brazil. For them to come to Belize and handle 700,000 tons is small compared to their expertise. Mm-hmm. So based on that, and as I said, we're going to combine Belizean expertise, the people making the $40 to $50 a ton, with the Brazilian expertise that knows how to grow 4.2 million tons, and then with our American expertise on how to put it all together. We believe that we can do it in Belize because there's plenty of sugarcane land. Now, as far as the biorefinery goes, as engineers, we purposely designed it so that at 50%, we would still be in the black for sugarcane production. And the one thing that Belize has that Brazil doesn't is it could frost in Brazil where they lose 20% of their crop. It doesn't frost in Belize. That's where we have, Belize has the superior conditions for growing sugarcane. Did I answer your question?
Yeah. Just one additional comment. And what about labor in Belize? I mean, I know that they are sugar growers for centuries, but how does that make you feel comfortable? Have you checked the labor capacity? Are they willing to dedicate their effort to produce the amount of sugar that you need, etc.?
Yeah, well, yes, and this is an excellent question. Yes, the labor is available, and Belizeans are great sugarcane growers. They're also great employees. And here's what we're going to do to assure that. Every project participant is going to share in GSR's equity in terms of a profit sharing program, because everyone is going to have a stake in the outcome. So when the project wins, they win. If the ethanol, because it's all dependent on ethanol price. If the ethanol prices go down, we can survive it. When the ethanol prices go back up, a lot of people are making a lot of money. Furthermore, in Belize, you pay people in Belize dollars, which is not a hard currency. Our profit sharing will be in US or Canadian or European or Great Britain pounds, which is a convertible currency. So our participants can buy Christmas presents on Amazon for their children, for lack of a better term. So we're real excited about it because all our participants will share equally with what GSR shares. Nobody wins more than the other. Nobody loses harder than the other, if that were to happen.
Sorry, Sharon. Sorry, and just let me ask a follow-on question to Ernesto there about the feedstock. I mean, any type of biomass project feedstock is obviously the primary concern and the biggest risk. I'm not following. Is the project going to own and grow its own feedstock, or is it acquiring feedstock?
It's going to be a half and half, because as I said, 50% production, we're good to go. We'll still be in the black.
And that's the self-supply.
So we'll self-supply 50, and then we'll buy from growers 50.
Okay. And the 100 million of estimated project costs includes acquisition of the land?
No, that's a separate SPV.
Separate SPV.
Right, which is in the process of being the land is being acquired like now.
Okay.
So okay, and that's the way the project will work. And then also, speaking of SPVs, our sugarcane farmers and GSR will have an SPV. It's not just going to be a contract. We're a partnership with farmers.
Okay.
Okay, so they will have a contract for 25 years. We will get sugarcane for 25 years. By the way, when the loan gets repaid in 15 years, all sugarcane farmers get a loyalty bump because we'll have less, we won't have to pay P&I anymore, right? So we believe that our farmers will do well. And our farmers aren't out there on their own. The Brazilians will come in, the 40 to 50 ton farmers in Belize will come in, they'll come together, work as a unit because everybody's got their eye on the profit sharing to do well.
And so the profit sharing is the primary driver for the farmers' economics.
Yeah, well, yeah. Aside, I must back, farmers are excellent. Some of the farmers in Belize are excellent sugarcane farmers. They do it for the pride of growing high yield. And besides, the higher the yields, the lower their cost. So the more money they'll make. Because if you get 50 tons per acre, it costs you less than it would 30 tons per acre, right?
Sure.
So their costs are lower. So they'll get paid a little bit of margin, but then they'll get paid profit sharing on top of that. And it's based on yield and quality.
So it's a partnership. It's not a supply contract for the sugarcane.
Right. It's a partnership.
So is there an obligation from GSR to acquire all of the sugarcane that these farmers grow, like a take or pay equivalent?
Yes. Oh yeah, that's how you work it out. I mean, think about it. We've done projects in refining and other type of thing. You need to have the supply secure 100% without question.
Agreed.
So once our farmers are in, they're in, and we're going to have training for 25 years. We're going to have help for the family. All the things. We're a family. We're a partnership with the farmers.
Have you, Sharon, have you considered, I mean, just as a backup, a plan B for the sugarcane supply? I mean, like, coming from Mexico, which is neighbor, and the area is also, there are sugar growers there or something like that. I mean, just in case, I mean, we're in an area where we have lots of hurricanes and things like that. And, things can happen. I mean, I don't know what your consideration regarding that would be.
Okay, the problem with sugarcane is you lose the sucrose as soon as it's cut. It's got to be processed within 24 hours. Yeah. So you're familiar with Mexico. Yes, in fact, our plan B could potentially be, but there potentially could be, we could use food crops. We could also use energy cane. Okay. So there's other feedstocks we could use for the interim. In fact, during a hurricane, we'll use all the food waste. Because the bananas, the citrus, everything on the ground. At that point, you'd make even lower carbon ethanol, so you'd even make more money during a hurricane. Okay. So yeah, and then however, and we also have backup land. We could start growing our sugarcane right away and have crop ready. So we'd have one crop, maybe 70% production year, and then back up to 100. Okay. So you have to have extra land available, and you'll also have the nursery. You could cut down a lot of the stuff from the nursery and feed. So we should still be able to go 70, 80% production in a bad year.
Okay, thank you.
So those are good answers, Sharon, about feedstock supply, and even considering the downside type of cases, right? The sensitivity down to 50% production. That's a great thing to have considered and built into the base case of the model. From an investor's perspective, that's the way we would want to look at it as well. And then when we look to the other side, so when we move from the feedstock production to the production of the ethanol, then the sale of the ethanol, are there long-term contracts for sale of ethanol?
Well, we have 8 years. Of a long-term ethanol offtake, 8 years, where what'll happen is they'll sell to the highest price in Belize's for tariff-free markets, and we'll share the upside. Again, GSR corporate strategy is that we all win together. So everyone, it's not supplier, contractor. No, we're all in it to win it.
Right. So where I was going with that is, if there is an arrangement for sale of ethanol produced, are there performance or production penalties for failure to meet a certain output? Are there obligations to supply a certain number of million gallons?
Yeah, okay. We negotiated, a friend of mine helped me, but anyway, we negotiated a very good contract. As long as we don't order the oil tanker, there's no penalty.
Sorry, as long as you don't what?
As long as we don't order the ethanol tanker to come to Belize, there's no penalty, right? Okay. So there'd be no penalty. If you order the tanker, you know, don't do, I mean, the ethanol tanker, don't do that. Oh, and then by the way, these estimates, to answer your question on the other side, the estimates are based on crude oil at $50 a barrel. If you know, they were just up to 70, going in the 60s now. So our estimates could even get better. We could actually produce less than ethanol if oil prices stay above $50 a barrel, right?
I see. Okay.
Go ahead.
Sorry, go ahead, Ernesto.
Well, okay, I was willing to ask you something a little bit technical, Sharon. I mean, I know you have these Brazilian partners, which are great ethanol producers. I mean, they are highly experienced. That's no doubt about it. I mean, do I understand that your process will be innovating some of the parts of the way you are going to be producing ethanol, or you're going to be using the traditional technology? Did I understand correctly that there's some technical variations in the way you're going to be producing ethanol versus the way ethanol is being produced in Brazil? Or is it same?
Yes. Simply put, we won't make sugar too.
Excuse me.
They make ethanol and sugar. Sugar production's high carbon. They can't get their carbon down because sugar production's food grade. It's high carbon. We're going to make all ethanol, just like very few in Brazil do, because they have to support their sugar market, right? Yeah. So because we do that, because we can in Belize, because we can't sell our sugar locally because BSI's already got the market, so we'd have to export it anyway. So there isn't that issue. So basically, because we don't make sugar, you can make lower carbon and your costs are lower too, because we don't have to buy the capital equipment for the crystallization and everything else. So yes, we're using the best available, think of it as we're using the best available technology in Brazil, and we're taking out the risk of sugar, because sugar dust explodes. We got rid of that risk.
Excuse me, you said sugar
dust explodes.
Oh, I see.
So we got rid of that risk. So that's what we'll be doing that's innovative. And then also we're going to have it, Internet of Things, AI, from farm to ethanol sales. So as optimization experts, which is DSR, we could keep reducing carbon and reducing costs, which increase your impacts and free cash flow equity accordingly.
Okay. Right. Thank you.
Okay. Moving off of the feedstock and the generation aspect, I wanted to ask a few questions about the financing and the way that you would see this looking from an investor's perspective. In the presentation, it looks like there's $100 million total CapEx. 20 million is supposed to be coming from equity investment, 80 million from debt.
Yes.
Are there any indicative term sheets for debt at this point?
It's a letter of intent.
Letter of intent from
IFI, International IFI.
Okay. And have they done biomass type of projects previously from the, yes. I know the project, part of the project benefit is the ESG benefits. And I know that a lot of the IFI are looking for strong ESG projects going forward. So that's a great play, but familiarity with the particular sector and investment class expedites the process.
Well, see, and that's the thing. They've done biorefinery projects before, which is that's good. So they're familiar with all the risks, and I believe they appreciate the fact that we've mitigated them. So, and then also on the 80%, some of that could be convertible debt. That's still to be negotiated, but our financials are solid because we're only doing ethanol at $50, ethanol with crude oil at $50 a barrel. So our revenues are very conservative. So
Right.
when you figure out your financials.
And the overall leverage, the IFI is comfortable with the 80-20.
Yes.
That's great. You don't see that in most renewable projects. So that's
no. Well, see, and again, when you see our financials, you'll see what I'm talking about.
Sure.
Because we've reduced costs and are doing things, I guess you'd say the easy way, like not making sugar, which could complement. Because look at it this way, sugar makes about $1.20 a gallon. See, because you could only make 20 million gallons. Sure, and you're going to have to do half of that as sugar. You're only going to make like $1.20 a gallon equivalent. Whereas some of our ethanol make $4 a gallon, and some of our, sometimes ethanol make $2.50 a gallon. Okay, there's way more revenue there for the same amount of feedstock.
Right,
So
and the same amount, the cost for.
And the same cost for the feedstock. You're buying 700,000 tons, you're producing either 20 million gallons of ethanol, which at high prices, or you're producing 10 million equivalent gallons of sugar plus 10 million ethanol, and the sugar price is about $1.20 a gallon. Because if sugar is 12 cents a pound, it's about $1.20 a gallon.
And the variable cost for the production is the same.
Yes. Oh, because by the way, well, no, and then now when you get to that, our sugarcane price is fixed. We took out all the market variable because they get profit sharing.
That's
right.
Good.
So if you do that, think of it this way: everybody's getting their margins on the back end because of profit sharing. So the front end, you could solidify and take the uncertainty out of the estimate because it's pretty much all fixed costs. Then when you have the profit sharing at the end, that's where you would show the variability because that would depend on what we sold the ethanol for.
The cost sharing at the end is after equity has been paid?
Yes. Yeah. Yeah, well, and actually we want to accelerate the equity payoff so no one's at risk. We want to get everybody out of risk as soon as possible.
That's good. We like that too.
Yeah. Sure.
So you're looking for 20 million in equity. You've got 17 lined up. You need that additional 3, that slug of 3 million. What's the intended use of those funds?
Oh, that's all part of the biorefinery build and construction. That's really what it's focused on because that's we've kept the agriculture, the sugarcane part is a separate SPV. So, and basically you could, and the 3 million could come, the construction's 2 years. The 3 million could come in on the second year. They don't have to come in on the first year. So then, they'll see it up, see what's happening, and then come in with the 3.
Interesting. And it's an equivalent position within the capital stack. There's no priority amongst the equity investors.
Well, that we could discuss that, but yes, it will have high priority. Even though it's coming in later, it could still have the same priority. Basically, when you're looking at it, GSR equity is the one that is the low person on the total pool of equity. Until we're all not at risk. Right?
That's great.
I have another question, if you may. What is the length? I didn't get. What is the length of your offtake agreements?
Oh, it's 8 years, but it's subject to renewal.
Subject to renewal. And let me ask you something that is probably not so comfortable, but I need to ask it because it's the new question for the fuel supply. What is in your mind with regards to electric vehicles? And I mean, I need to know what you think about it because it's coming much, much faster than what anybody would have expected, actually. I mean, and understand, I mean, if you said very clearly you want to take everybody money's back as soon as possible to lower the risk of the equity and so forth, which is fine, and everybody would be happy with that. I mean, what's your expectation with regards to the future market of fuel supply?
Okay, for
I mean,
fuel
even
supply,
ethanol, right?
Well, yeah. Well, see, here's the thing. the reality we have to deal with is it doesn't appear that gasoline is going to go away for the next 25 years because a lot of the goals are set for 2050. So now's the time to get in, because in 25 years, the ethanol plant's useful life's over. So with that being said, now the other thing is let's say the gasoline production goes down. You got to remember something. Our ethanol is zero carbon, so we'll reduce twice as much as sugarcane ethanol and 3 times as much carbon as corn ethanol. Okay. But our prices aren't twice and 3 times the cost. So oil companies will save $1 billion over 25 years by buying our ethanol, or $2.5 billion compared to buying corn ethanol. So there's a 200 million or 2,000 million gallon shortage now. If that shortage goes down, are the oil companies going to buy our ethanol, or are they going to pay more money for sugarcane or corn ethanol? Mm-hmm. So that's how we've looked at that risk. And then for electric vehicles, if you saw on the slide how we could expand, our biorefinery plant site could start the electric vehicle industry in Belize, because our power is baseload. We go 24/7, 365. And the way you would do that with all the SIDS, this is our strategy, is have your biorefinery by the airport and start with all the cars that are owned by the car rental companies. They'll be EV. Then we would power. And Belize is only 120 miles, 170 miles wide by 60 miles long. So the cars we could be the hub for Belize. Same thing with Jamaica at their international airport. Same thing in Barbados. Put the biorefinery somewhere in the vicinity, and that's how you can start the whole EV throughout the Caribbean. And then, and getting on that same vein, just anticipating your question on resilience. Our biorefinery will produce baseload power after a hurricane. However, in addition, it'll also produce food and water for the food, electricity, and water nexus. So Belizeans will after a hurricane, they will set the lead by example on how to recover in the Caribbean. We believe, GSR, that each SIDS in the Caribbean could use at least one biorefinery, if nothing else, as a backup for a hurricane. And in addition to that, it will build a new economic pillar and spur an economic development, plus reduce all the carbon.
Okay.
Is there any particular subsidy for sugarcane production in Belize? I know some of the other markets that you're mentioning there have subsidized production.
No, we're going to work together with them. Okay, they have to buy inputs. We'll buy them in bulk, and then their costs aren't up, rather than each farmer buying their own. Fertilizer, weed control, and pest control. And don't forget, when ethanol, you get the vinasse that you put back in the soil. So you put some of the nutrients back and need less inputs, fertilizer and stuff. So that's where it's good. So our farmers will be set as we are to grow sugarcane. We'll be capitalized and be able to do it. And if you grow it at $40 or $50 a ton, the cost is lower than if in other countries where they do it less per ton.
Okay.
And that, sorry, to go back to the financing and the debt, you have the letter of intent from the IFI. What's the term of the debt?
15 years.
15. And they're comfortable with that, even though there's an 8-year contract?
Well, yes.
Offtake.
Yes, but our intent is to try to extend it to 15 offtake. But right now that's where we're at. But we'll once we get the 3 million and have the package together, that's where you do the negotiations to finalize everything, right? Because then everything's put together and that's when you could do it. But that's the one thing we've identified that we still want to work on. However, you have to give it the big however. With a 2,000 million gallon shortage, what's the odds they're not going to buy our 20 million gallon ethanol? I mean, and it's all regulated. The US has the mandates, the Canada, the UK, and the EU. So
as far as the ethanol percentage of fuel.
In the US, it's 10 going to 15. They're trying to do 15. In the EU and the UK, it's 5. They're trying to go to 10. In Canada, they're trying to follow California, which is the US, and go to 10. That's all starting now. So all their pumps are going to change, just like in the US, from 100% gasoline to E5 or E10. Mm-hmm. Now in Brazil, they go up to E25. Think about that. Then the mandates will go up even higher.
Gentlemen, if you don't mind my interrupting at this point, I can tell we could go on for a long time with this. It's as Sharon mentioned, I know the project intimately, and there's lots to talk about. But we have a number of questions coming from the audience, and that Jorge will pass on to Sharon. But I'd really like to thank you. I think this is a terrific illustration of the process. The issues on feed supply, the financials, the agreements, the kind of things that for those in the audience who are developing projects, this is the PFAN support helps the entrepreneur to focus on the questions that people like Ernesto and Jason have when they're considering an investment, which is what the entire game is about. So once again, thank you so much. I can't imagine having had a better set of questions than you've provided. And Sharon, you're doing a nice job. Hold up there, girl, because God knows what Jorge's going to be asking you. Jorge.
Thank you, Sharon.
Yes. Thank you very much. Sharon, as usual, really, really informative presentation. Clearly, this is not a project that just fell off a shelf. It's been a work in progress for a while, and it shows. Jason, Ernesto, extraordinary questions, very, very much on point, and very much from the focus of the investor that would be looking at getting involved in this. Therefore, feedstock questions, therefore regulatory questions, therefore forward market questions, and also financing specific questions. So thank you both very, very much for that. Good answer, Sharon. Sharon, there's been lots of questions, but lots of questions. I'm going to be focusing on the ones that are more relevant to the project itself, rather than some of the broader environmental or philosophical questions that have cropped up on that I'm sure you will have already received. But let's take a look at this. Let's see, Sharon. All right. Okay, Sharon, a quick question. Two questions, actually. Well, I think that you've addressed this already, but the question's being asked: who are your end customers? And how do you factor in water usage to grow the sugarcane in the case of your project? I'm sure you've received some of these before.
Okay, so our end customers are all the oil refineries in the US, EU, UK, and Canada. We have an offtake agreement with a major oil company that's going to sell it to the highest price amongst they all know each other, and then we'll split the upside. Now, in terms of water usage, that's an excellent question, because in Belize, you don't irrigate sugarcane. Sugarcane is a natural resource of Belize. It was colonized by the Brits for sugarcane and mahogany. No irrigation is needed, so we don't use extra water. In terms of water for the ethanol itself, we're going to draw from the river. We have a 3-phase water filtration and cooling, so we'll return it to the river in better condition than it was when we got it. So we're going to be very high efficient water usage.
Okay, that's very good, because I think that the tenor of a lot of the questions have to do with the recognition of the business opportunity, the recognition that there is a market, recognition that these are interesting and cleaner projects, to use a term, but they want to take into consideration the environmental impact on the country and how that is being mitigated and measured as well. So I think that you're answering that question on water. I think addresses that.
Oh, I can answer real quick though.
Go ahead.
Okay, as far as we're going to reduce 10 million tons of CO2 over 25 years. Since we're going to take bush, which really isn't absorbing any carbon, and grow high yield sugarcane. In addition, we're going to have buffer zones between all the sugarcane, and that's where there's going to be a lot of vegetation. And for all your environmentalists, one of the top carbon absorbers is teak. Teak is a natural resource of Belize. We're going to plant a lot of teak trees. So we're going to measure our environmental footprint when we start. We're going to measure it before we up and running. And we believe, or we can achieve that we'll have less CO2 emissions when we start than before we started.
Okay.
Just answer that.
Another question related to weather. I think that you've addressed it already. Impact of hurricanes and tropical storms on crop yields and production.
Okay.
You have factored that in, actually.
Yeah, okay, but here's the thing. This happened already. They already had a Category 5 in Belize. Sugarcane lays down. It doesn't blow away like bananas and citrus. It lays down. So what you do is you're going to drain the fields, but in the meantime, you could still get up and running because you could hand cut it just for that, week or two before you're up. Furthermore, in Belize, you don't operate the harvesting. The harvesting is during the dry season from December till June. Typically, they haven't had a hurricane. One year they had a late hurricane, and that's how they handled it. So conversely, they could have postponed startup and gone 2 weeks out into July.
Okay.
So hurricanes, don't really cause that much of an issue.
That addresses quite a few questions that have been received. Now I'd like to pivot over to SDG related questions or sustainable development goals, because this is a question about the human capital, about the human resource, the local human resource. How are you integrating it? And what type of strengthening are you doing in terms of capacity building, knowledge sharing? And then, of course, we are aware, you made it very clear about the profit sharing scheme, which I think is a very innovative way of approaching a lot of this. But please, if you could add some comments on that, that would be helpful.
Oh yeah, 1% of the Belize labor force is ultimately going to run the biorefinery, and our partners from Brazil are going to sit back and enjoy what they've helped create in Belize. So because they're going to have training from the start to finish, they're going to have training enforcement. We've worked in heavy industry before. We know you don't train people and leave. You got to train and stick behind them as a coach, like our PFAN coach. They stay behind them to make sure everybody can do it. And you could take Belizeans, 50% men and women that currently don't have the skills to run a biorefinery because we're the first one. And all of a sudden they'll be experts, so we could expand and do the second one and the third one and the fourth one in Belize. And you take part of your crew, experienced crew, and go, and you integrate with your inexperienced and then train another group again. I mean, think about it. If we do 6 biorefineries in Belize for the 6 districts, we could help employ 6% of the Belizean labor force, 50% women, and they're all going to be trained and highly skilled. And we're also do cross training. And don't forget, our biorefinery is going to have the Internet of Things and AI. It's going to be sophisticated. They're all going to learn a lot of technology. Oh, and on that regard, we want to have cross-training with Purdue professors and Belizean professors and Purdue students and Belizean students going back and forth, which would really be a great experience and opportunity for all, because we believe that way, the more minds together, the better the operation.
Very good. I think you addressed a lot of those questions on the on the SDG front or Sustainable Development Goals front, the environmental side, without question, the social side, the way that you're approaching it. I think your gender approach is certainly innovative in the sense that it's seeking to balance with tangible metrics that objective. And let me see, we got a couple more questions here. I'm trying to find questions that are not related to some of the issues that have already been addressed.
Oh, and I forgot. Sorry, Jorge. I forgot. I got a really quick one for the SDGs. The reason why we can achieve all 17 SDGs is because we're also going to start with some of our profits, the GSR Foundation, for education, healthcare. Oh, the other thing is we could make COVID fighting bioproducts for healthcare for that SDG. Because that's what the ethanol producers in the US are doing in Brazil. You can make, hand sanitizers. So the point is we looked at all 17 SDGs and we figured out how can we hit them all. For the ones we can't hit directly with our biorefinery, we're going to start a foundation and hit them then. And also train more entrepreneurs, more Belizean entrepreneurs to do more projects such as solar, wind, and other green projects.
Okay. That certainly answers several of the additional questions and answers the question of how is it that you're addressing 100% of the SDGs. I think that was a very good answer. I have a question here going back to feedstock, and it's just asking the question again of a plan B for feedstock, because things happen, as you know. And it sounds like you've already contemplated the potential of importing feedstock from, in this case, Mexico. I assume not Guatemala in that location.
Well, it could from Guatemala because we're like, but we'd have to invest. That's not my lane because our real plan B, that's plan C. Well, actually, it's plan D to import. Because that's your last case. But for plan B, we have enough land, we could grow our own, we have one bad year, we have one low year. That's really the plan B. And don't forget, you can cut up your nursery, right? Because you're gonna have a bunch of nursery stocks, so you can shave off some. And then for plan C, there's also other, Belize grows, wild cane grows throughout Belize. So potentially we could throw in wild cane, and I could get the full answer from that group that's doing that, but there's a lot of other, Belize is tropical. It's full of a lot of biomass that we could use instead of sugarcane if we fall short. Oh, and for example, in Brazil, they use eucalyptus for some of their power. So we could do that too, to make sure that, because some of the sugarcane, you need the leaves and trash for power, but you could use eucalyptus instead and use the leaves and trash to make some more ethanol.
Sharon, I got a very specific question on how many acres you're using to produce on.
Oh, okay. We're securing 20,000 acres, which would be 35 tons per acre, but we're assuming we can go higher.
Okay, I think that we've been addressing the bulk of the questions. I'm just double checking now, Sharon, and we'll be closing the session in about 2 minutes or so. So if you have a final question for Sharon, please include it either in Q&A or in the chat. I'm doing a quick scan. Okay, let's see. Right. Sharon, a question. Sargassum is coming up a fair amount. Is that something that you have that could potentially be used as well?
Yes, actually, that's an alternative. But here's where you have to look at. You have to look at your energy ratio. Sugarcane energy ratio is 8 to 1. Corn energy ratio is 1 to 1, meaning how much you put in and how much you get out, or how much you get out to how much you put in. And sorghum is like 3 to 4. So is all your bamboo and switchgrass and other grasses. Because sugarcane is a grass. It's classified as a grass, but it's got sugar in it. It's got sucrose in it, whereas the other grasses do not. So from a efficiency standpoint, you want to go with 8. You don't want to go with 1.
Okay.
So, but you can use the other ones again, but that's what you call in engineering a stopgap solution for that year, because then you would continue as you planned.
It's a reminder that nothing's free as well. Okay, I think that I'm going to ask one final question. I'll just take I'll take advantage of my position in this case, moderating this. And the question is, you mentioned the possibility of replicating in other islands of the Caribbean. How much interest have you received already in terms of that? And have you already pre-selected some locations that you feel meet the conditions of success for such a replication? Just a general question, and then we'll close with.
Oh, okay. So yeah, I mean, obviously Jamaica and Barbados would be 2 key locations that you would try to target. And again, it would base on the conditions and the cane. Now, because they're islands, sugarcane costs are high, and land, they're not going to have a lot of land. So in that case, we want to work on the energy cane, because energy cane is like, it doesn't have as much energy ratio. However, you can get 4 to 8 more tons per acre than you do sugarcane. So that is a good solution for an island where you have high costs. Also, in Brazil, they recommend you not go below 600,000 tons of feedstock. So we need to look at that. We need to look at that too. Potentially, can we go lower and still have the economics work well? It won't work as well as in Belize, but while we're working in Belize, we can make sure we prove all that out. Because what would be really nice would be each island have more what you would call a smaller size biorefinery, just to start to see, and then once it's up and running, the potential should become obvious to everyone that you could add more. And see, our biorefinery is standalone, it's self-powered, right? So you could actually have it be the backup for microgrids in a remote location. Think about it. Because when the sun's not shining at night, you have your biorefinery going 24/7, 365, it would be the backup. And then your people could still have power at night.
Okay, I think I'm going to close the session. Patrick, did you want to add anything at this point, or should I just proceed with closing the session?
Go ahead, Jorge. I think that you managed to tease out the important issues, and Sharon did her usual fantastic job of addressing them. Thanks, Sharon. That's wonderful.
Thank you. Thank you.
Thank you to all the participants. Thank you for the extremely active chat box. All sorts of opinions and all sorts of information shared. Very grateful for that. And very grateful to the organizers. Thank you for the invitation. Thank you to Jason and to Ernesto. It was extraordinary to have you on board. And once again, highlighting the difference, the differentiators for PFAN, which would be, in my world, in my view, 3. Project-centric. We work with very strong advisors with on-the-ground experience and in-the-field work, and with investors that have closed deals and understand what the issues are, whether it's insurance or feedstock or the specifics of the financing that is required. Thank you all very much for joining us. And I think that is it. This is it for this session. Thank you.
I would just add that if those of you who want to find out more about what PFAN does, just go to www.pfan.net.
And that is the perfect cap to a good event. Thank you very much to all.
Thank you.